All right, good afternoon, everyone. Thanks for joining in. This presentation is recorded and will be shared afterwards. So if you miss anything or want to recap, you'll be able to refresh there. This is part of our 15-minute webinar series. As always, my name is Ben Harmon. Thanks for joining. Today, we're covering credit repair and boosting. This is something that I recommend doing yearly for everyone, just because there could be changes in the way credit's reported or the way that you build it or fix it. So it's always going to be up to date on these topics. So jumping in. What is a credit score? So a lot of the times when we think about what a credit score is, we get caught on the numbers and mistake it for the report itself. So we have a fair range of between 579. The lowest it does go is 350, and the highest is 850. These credit score ratings are generally just like a report card. So when you think about your number, the higher the number, the better your report looks for them. And it's simply from a financial institution standpoint, just gives us, a good idea if you're going to repay or not. Simply that, nothing more than that. It's just a risk tolerance, and if it falls in, they usually set risk tolerances like the most risk that a financial institution will take on, and your number is definitely one of those risk equations. So definitely good to be in that good to exceptional range. I know a lot of us are given unfair circumstances, and there's always hope, and we'll talk a little bit more about that here going forward. So when we think about what is a credit report? So the credit report is a snapshot of your credit profile, including your credit history, the numbers and everything like that. Helps lenders like us understand how, again, more likely you are to repay your bills. And also gives us a longer history on the types of amounts that you can take on. So if your history shows that you consistently put a lot on your credit card and pay off a lot versus carrying a balance, those are big indicators on our credit report as well. So your credit report is filled up with these 5 major points: the amounts owed, payment history, length of credit history, and new credit. For a lot of people that start building credit at a young age, so if you have kids or if you are a younger person that's like 18 area, you're going to see that new credit and that length of credit history really not be a part of your credit score until 2 years or 24 months of reporting. I don't know exactly why they do that. I just know they do, and we just want to make sure that you're aware of that. A lot of the times, there is the theory that they did it to protect people at young age from getting in too much credit card debt because they were, given that. But at this point, in my experience of being in banking for over 13 years, I've seen a lot of people get set back. So, they'll graduate high school, go to college, trade school, or jump into the professional realm, and then they get that income increase, and they still have to wait 2 years. And so they still might have to rely on a parent or a grandparent or some other co-signer. And, those are not standing in line around the corner all the time. So it might be difficult. Nowadays, you can actually be 16 with an adult co-signer and build credit. It's actually recommended. The longer you build credit, the better your score. If you can build, so essentially they block your score, those that 25% for 2 years. So this will help you build it so that when you do turn 18, if you started when you were 16, you'll have that 2 years of credit. And so when you turn 18, you'll have a way better credit score and be able to get approved for what you can actually afford. I know that when I was building credit as a young person, my mother just got me a co-signed credit card, not a joint user, but actual co-sign. And I actually never even touched the card, and she just used it for daily purchases. My mother had a great credit score, so it was a benefit there for me. So there are a bunch of different ways that we can build credit, and also secured cards. And we'll talk about those here in just a minute. So strategies to build credit, and we will talk about boosting, but to build credit, it's open a line of credit. So installment loans are okay. Same thing with, student loans or anything that's got a fixed monthly payment, but lines of credit are gonna be the best way. Most borrowers will report your history. It's good to call them, even if it's like Chase or Wells Fargo or Arbor, and verify who they report to, because some financial institutions may not report to every credit bureau every month. They might just report to one. And then, so request that maybe does that, and you might not necessarily get that honored, but you will at least know what bureau they report to. So if you are going to certain places, like in Michigan, a lot of us use TransUnion. So TransUnion, in my opinion, is one of the better ones for kind of like what you would concentrate on. It also happens to be the mean of the 3, the middle one. Excuse me. Another thing to do is open up a joint account. You will share credit history. So only do it with a person that you were willing to sacrifice your great score or would help your score out. if you're both in a position where you have less than perfect credit scores or colorful credit, it wouldn't be so much at first, but in the long run, it would help be more established, because when you come to a joint account, there's just two people held accountable. Again, at the end of the day, when a bank or credit union lends you money, they do worry about how they would recover it back. And if they have two names, like a cosigner, it's better than one, just more people. And then always pay your bills on time and in full. If you can pay your credit card in full each month, that's better than just paying the minimum payment. Some people say pay 4%. There's different theories of doing it, but my recommendation is, with a credit card, put on there what you can each month, as much as you can, but as long as you can pay it off. You don't want to carry a balance. I mean, obviously emergencies happen, and that's an unforeseen circumstance, so it can be used as a short-term crutch. However, if you carry a balance on a credit card and it's been a long-term, talk to one of your ARBA representatives today, because there are definitely options that we can do to roll it over to something that's more affordable, or at least has a set payment schedule. When you read your credit report, that contains a lot of the following. So you got public records, personal information, credit inquiries, and credit accounts. So the public records are like defaults, you got lawsuits, medical records, anything that was delinquent or unpaid. Personal information, like you can imagine what that is. And then the credit account, so the debit status, open and closed. It also will tell you like how much you've had on there, what's the highest, what's the credit line. It also will show how many on-time payments, and we call those bullseyes because they're just little X's, and they show, much like a report card. It lists like, Arbor Financial Credit Union, and then it would have the date of open, and then it would have all these little X's for every month representing on-time payments, in a circle for something that was missed. And so a lot of times when you look at your credit report, if you see a bunch of those bullseyes on there, that's a good sign. And then credit inquiries, we do see this being one factor to be careful when you're applying for things, because like if you go to a car dealership, you might say, give me the best deal you can get. And what they're going to do is they're going to go up to the computer and they're going to apply for like 3 or 4 different places. So you'll have 4 inquiries all at once, and they're trying to give you the best deal as possible, like you told them, but they might not know that you went to another dealership or 2, and you see a negative impact upon your credit score when you see that 10th one come up. So 10 within 12 rolling months. So if you go to a car dealership and you know exactly where you want your car financed, you can tell them specifically. You could also say, hey, don't run more than 2. And there are other places in sales like that. Same thing with like boats or RVs or any of those recreational vehicles. Could also be something that they would do multiple inquiries. So to have that in mind when you're talking about that, because that will have an impact for people that have been reporting for a long time, more than like 5 or 6 years of credit history. It is more temporary, but a younger person that has a thin credit report, maybe within 2 years of building, it can be pretty impactful. So just be careful of that. The 3 credit bureaus in the United States are Experian, Equifax, and TransUnion, and they make their scores based upon a similar equation, but we don't know the exact equation. We just know, based upon how credit reports work, that we've come up with our assumption. And by us, I mean, the financial area, but each of them has their own little way of doing it, and they keep it private for that reason, so that someone can't personally work it. But again, we have pretty good ideas of what the equation is close to, and can make good estimates based upon like, oh, your number would change this much. This is how long it will take to go up. There's a lot of things, and we do that for our Arbor members. So if you are a member and you want a free credit report checking, you can set up with your banker or manager, and they'll pull it and go over with you. Sometimes there might be some room for improvement, and sometimes you might just be all set. But the cool thing is, when we have that report, if there's additional ways to save you money, we'll show it to you. And if it sounds good to you, you can choose it. But the cool thing is it's free, and you get it anytime you'd like. So steps to repairing your credit, and we'll talk about boosting here in just a second. So steps to repairing your credit is making on-time payments. Contact your lender if you need help creating a plan. So this is before the due date, so even if you're currently right now and something comes up and you're not gonna be able to make that due date on whatever it is, call beforehand, because we have a lot of different options. Not saying it's always gonna be perfect, but we have a lot of different options before it becomes due. When it becomes after due, there's a lot of regulations that might step in and regulate how we would handle that. And it's not generally the friendliest. Even like mortgage foreclosures are probably one of the most fearful things that I see in the financial realm, just because of how bad the process is. But it's, again, process that is vetted by our federal government, and we're required to follow those. So call before you go late, and sometimes it could be skipped a payment. Sometimes we could just give you a few days. I mean, really, it just depends on what you're doing, especially with COVID and all the things going on with stimulus and help from the government. You'd be surprised what types of programs are out there for whatever kind of banking vehicle that you're in. Step two is definitely for the bureaus that you provide information to bureaus reports on errors. So if you see an error, it is your job. No one else is going to manage it for you. Member members, much like other financial institutions, have a thing called ID Protect or a LifeLock or ID Alert. It's essentially an insurance policy for your credit report. These are good things to have because it's about the cost of a cup of coffee. It does provide you monetary coverage of up to $10,000 or more, which is the national average to recovering a credit loss if like someone took your name and got a credit report and stuff like that. But the best part about this is that you can electronically file. The credit bureaus, if you have to fix it manually, is sending certified mail, and you would request a receipt. So this is a way to do it free, but if you have something in the background like an ID Protect, that service, it's definitely much better to do it through there because you are paying for that, and there's either a digital way of doing it or someone in that program that will help you do that. And the cool thing is the credit bureaus are obligated to respond to you within 30 days. So if you send certified mail, you know that you got there on that date and a signature of receiving or just an exceptions receipt. And then you will get that back within the same time frame, that 30 days. So it is a little bit longer, but it is still free, minus the shipping. But it's something definitely to do those two things to repair your credit. And special circumstances, also monitor your credit report and scores, pay your bills regularly, good credit counseling. So get credit counseling doesn't necessarily mean that you have to be like filing bankruptcy or that. You could just be like, I have a lot of debt, which maybe I should talk to a professional. And you don't have to walk into everywhere and share all your business. You can work with your personal banker or branch manager. There are things here in the Southwest Michigan we call Green Path. It's a company that comes out of Battle Creek, and they do a lot of stuff that we can't. So when it gets beyond something that we would be able to help you with, they're the next step. They're a free service. And I do remember checking with the FCC, if you ever do any type of credit counseling, always check their business status. And the federal government, the SEC, will have a list. So if it's a debt consolidation company that meets certain requirements, or credit rebuilding, just that counseling part, if it meets certain requirements, it's certified by the federal government, and these are deemed to be safe. So start there first. There are a lot of scams out there where people say they'll help you build your credit and they just take your money and run. So do be careful. Like fraud everywhere, it can happen. But do look up the SEC list, or Michigan.gov will also have a list of trusted debt consolidation specialists. And then also a lot of times when people are starting to run into that debt, it's the financial products. So consider maybe a consolidation loan, which they can take your payments, roll 3 together or 2 together, give you a lesser payment, set you up with a fixed payoff so you can see that light at the end of the tunnel, and then your revolving credit line's open and you can't reborrow on those installment loans. So guaranteed payoff as long as you pay on time. You can always pay a little more. Simple interest loans like that don't have any term on that, so you can set up a lower payment for comfortability each month and then just throw extra when you have it. But we like getting people out of the revolving when they're running into that, because generally when we consolidate, we'll actually lower. So they might, let's just pay, for an example, on if they had 3 credit cards around 17.99% APR annual percentage rate, they would be maybe paying $100 each. When we consolidate into an installment loan and give you a lower rate, maybe closer to like the 6, 7, 8, or 9% annual percentage rate, you'll see your payment go to like 200. So instead of paying 300, you're spending 2 with a fixed interest rate and a set payoff date, and then you free up a little bit of cash flow. A lot of times this is like the key to it. I also see another time when people get into like having a little bit of debt, just remember twice a year, if you're paid bi-weekly, there's that extra paycheck that comes in. I know it sounds kind of like, well, I use it for other things, but I'll tell you right now, in my experience, when people are just like a few grand behind or just trying to catch up, that extra 2 paychecks is where that comes from. And it's a great way to plan it, because generally, again, you get that second paycheck or that third paycheck within the month, and you get the next paycheck before your bill cycle would come. So do, if you can, look at that, look forward. A lot of times it comes in mid to end year. But it just depends on your cycle if you're paid bi-weekly, but it's a huge thing to help kind of get that foot forward. So strategies to improve your credit. So this is the boosting part. Use less than 30% of your available credit, and do not max out your credit cards. I know we see a lot of different variances as far as like don't going over. The time I see a negative impact. Now, usage is definitely one thing. If someone figures out your debt to credit ratio, which is your overall amount of money you have on all your credit cards divided into how much is available over your overall credit cards, gives us a percentage, and that's called debt to credit. I see an impact when that gets over 75% per line, that you'll actually see an at or near credit line and a deduction in points. So try to stay under that. 30% or less is even better. And then paying that in full, definitely paying on time, but paying it on full each month lets us know your disposable income. Because a lot of times, think about this: if you have, a car note, a mortgage, let's say you had, other bills to pay. A lot of the times when someone's struggling with living out of their means, first off, they'll have higher credit card debt, or B, that'll be the first thing that they would not pay off. So if I see someone consistently carrying a balance and not paying off their credit card, I might assume that either A, temporarily they had some money loss, or they needed more cash flows than they had, or B, they're just not that good at paying off. And so again, the secret to the sauce is definitely paying it off each month in full. And yes, if you're doing it as a strategy to boost your credit, where you're like, okay, cool, my credit score is here, I want to see if I can get it even higher. The more that you can put on your credit card and pay off as an adult, if you can put 5-6 grand on there a month and pay all your bills through your credit card and zero it out each month, that's huge, because that shows credit usage, which again, the best way to improve or build your credit score is a revolving line of credit. So using that and paying it off. Be careful though with some of your bills. So I know sometimes under like manual reviews, if someone was like close on the cusp of being approved, if we looked at their credit card statements, if we saw them using like paying all their utility bills and everything, we might assume that they're living outside their means. So be careful if you're just trying to boost credit, not necessarily get anything. But again, if you're on the page of boosting your credit, chances are you're not on a cuspus of any category. And so again, the more usage of it, still being mindful of the 75%. But generally, if you pay it off and if you put it on there and pay it off each month, it doesn't actually cycle with that balance, but it does show. And definitely pay off your loans on time. There's nothing wrong with paying off loans early, but just know if you do a loan to build credit or boost your credit, you don't really get any type of reporting until after 6 months. I know some people will say 90 days, but it becomes 6 months, or realistically, the best thing is a year. So if you do a loan for building credit, or you're like, hey, I came into money, but you're still, again, on the process of boosting your credit, right? Not just saving money, but you want to like see how high I get my credit score. Wait for that year mark if you're doing something before you would pay it off early. Again, the more reportings that you have, the more bullseyes or on-time payments that you have in your credit report from the different trade lines. So trade lines are, again, everything stacked up, the better it's going to do. Do not apply for multiple loans and credit cards at the same time. Now, I know I said earlier about the car dealerships and them doing inquiries. This is something that does fall into that, because if you do hit too many inquiries, let's say, again, a day of car shopping, go to 3 dealerships, you might be at that 10, no problem. It's the same thing with credit cards. If you have a home project come up and you're like, oh, cool, I'm going to go to Lowe's, and the Lowe's doesn't give you quite as much, and then you go apply for Home Depot, that looks weird to us on a credit report, because also we see, what's this person doing? Again, we trust you. However, we've also not been told the truth when people do their things. And so a lot of times when we see people go out and get a bunch of credit cards, we start thinking like, okay, are they going through something in their life? Is there a separation? Is there a midlife crisis? Are they going to go wild with their credit report? And so just be careful with how many times you open up. A lot of the times, if it's like a credit card, try to keep it like under 1 or 2 a year, unless you really absolutely need it. But if you're trying to build credit, it's more about the utilization versus how many credit cards you have. Because a lot of times if you utilize it, that card will give you a bigger credit line. And so again, that'll help your debt to credit. So the more credit line you have available, but it's not necessarily how many credit cards, it's overall lines available versus what you're spending. And so it's something cool to do, but just be careful how many you open up. Make a financial plan or debt management plan to reduce debt. So we're one of the only countries in the world that actually has active management, or has what's called good debt, like student loan debt, that we actually went to school instead of going out overboard and taking out too much, but just doing the frugal student loan. Same thing with a house. They consider car a reasonable car good debt, because you obviously need that. So you're paying a little bit of money now interest rate, but you get the car, but it also allows you to make an income. So that's good debt. But make a plan to mitigate that or reduce it. If you have a vehicle that's paid off in full, could you do a cash out? Do you have equity in your home? Are there any other options? And again, if it's something that you're not really sure, stop in and talk with your banker. If you haven't introduced yourself, now's a great time. Even if it's not here with Arbor, it's nothing better than having a relationship pre-established with your financial professional, because if something stressful comes up, it's nice seeing a familiar face instead of strange faces. And then Ambassador, which is always recommended, is the monthly budget, and do account for the seasonal expenses. I know we get a lot of seasonal expenses that blow our budgets out. But be careful that, holiday spending, vacations in the summertime, maybe sports. I mean, even something simple as like an oil change or car maintenance could be seasonal, something that doesn't happen monthly. So create and follow monthly budget, but also make sure to account for those seasonal expenses. And then you should review your credit report. They say 4 times a year, every quarter. If you don't have a service that lets you see your credit report, you can write all 3 credit bureaus 4 months apart, and they will send you a free credit report once a year. You have to pay for shipping or for return postage, but you can essentially get it for free. But you should do that every 4 months and to see the accuracy, because a lot of times when people don't realize their information has been compromised until they actually need their credit and they apply for something, like they need a car or a house, and all of a sudden it's like, ooh, someone's got a hold of your credit, and then this is like the first time you're finding out, and then you're not only are you not getting that loan or ever do anything, it's going to be quite a handful for the next few months, especially if you don't have an insurance on your credit report. So that's all I have today. Thanks for tuning in. I do appreciate you stopping by. We did over some credit repair, kind of understand what credit is, the credit report, and then lastly, some boosting. I hope to see you back next week, where we're going to be doing technology and budgeting and using technology to make our lives easier, safer, and more secure. So feel free to check back then, and we'll see you then. Thanks again for stopping by. We'll see you soon.